Good morning, everybody. It's Wednesday, August 21st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn up a penny and a quarter at $3.99 and a quarter. November soybeans were up 5.5 at $9.81 and a half, and December Chicago wheat was down 2 3/4 at $5.53 3/4. This morning, the USDA had some export sales announcements out, 132,000 metric tons of soybeans to China for 24. Also announced was 121,000 metric tons of soybeans to unknown destinations, also for the 24 crop year. Last evening, I should say, Pro Farmer Crop Tour released their Indiana and Nebraska estimates. Indiana corn came back 187.5. This is versus a USDA August estimate of 207. Bean pods were better than expected at 1,409 pods. That's versus 1,310 last year. And in Nebraska, estimated the corn at 173.3. The USDA is currently at 194. And soybean pods were slightly higher, up about 1%, 1172 on the pod count versus 1160 last year. Good morning, guys. Hope everybody's doing well. We did have a couple of follow-ups from yesterday's show that we wanted to talk about first thing here. So I'll pose the questions to the group and then we can move it around. But first viewer asks, will this year's crop be held, long-term like we saw in 23? So I think they're alluding to the fact that, we've had an extremely long farmer for quite a long time, on different types of contracts and things like that. So Dustin, maybe a few comments there, and then we can move on to the next one.
Sure. Thanks, Dan. Yeah, I think this is highly speculative, to answer this. So this is just my perspective. I think that what I've heard from growers, they're kind of hyper-focused on just having a home for the corn so they don't get into a situation where they're having to carry corn too long. Last year, there was kind of a perfect storm of situation that I think allowed for the holding of grain. And that was that we did have corn, in the sevens early in 2023 for their old crop 2022. So cash flow, cash was high coming into harvest 2023. And we had a low, in the market in the mid to high fours harvest 2023. And, after, $1 to $2 below the 2-year moving average. So there's a high reluctance to sell, and there was lots of cash and ability to hold for multiple reasons, tax reasons, but just having, smaller operating notes at that point in time, the ability to hold was strong. I don't think that we're in as good of a cash position coming into it personally. I think that we have, you just look at any of the university data, Farm Doc, Purdue, the projections of where the losses are going to come in at this year. Interest rates are still rather high. I know we're talking about some cuts coming up soon, but carrying forward debt when the wind is out of everyone's sails and the perception that we're going to have perpetually large supply is going to get people moving corn a lot faster this year, in my opinion. But there's still a reluctance to sell is the thing. So there will be some corn carried, no doubt. I just don't think it's going to be as excessive as last year.
Very good. And then the second question was just, I guess, a follow-up in terms of what we were visiting about on the Canadian rail situation. Grower asks, I guess their opinion, and they just wanted to kind of get what our view was, but they believe that basis just gets really wide and elevators could potentially stop taking corn due to the logistics backup. And, again, Dustin, I think you looked into it a little bit more this morning, and potentially it's a rail car issue, but there's just once again, a lot of things that would need to line up. And we have to keep in mind just how much volume is being done in that area as well.
Yeah, I think, this is definitely a bigger issue for Canadian growers. I'm sure that there will be maybe some disruptions of just, not the free flow of these cars. perhaps there would be some issues with the PNW for that reason. But I think, potash, things like that would be under question, right? That's a huge portion of potash moves by rail. So that might cause higher prices in the U.S. But otherwise, I don't have the foresight to say, well, I really don't know the rail line logistics, how much that's going to disrupt ability for, that PNW to have the free flow of cars. I couldn't answer that, to be honest, but I think this would be a much bigger issue for Canadian growers and U.S. growers. You just look at total number of corn exports and imports out of Canada. It's like 1 to 3 million metric tons generally. So we're not really talking about a big quantity here. So I think there's more to be known on this later. I don't see it to be a huge issue for the majority or definitely not an issue for futures price action, in my opinion.
Yeah, we saw something, happen. Can't remember what year it was, where Canadian farmers and, call it the Northern Plains there, couldn't move oats and some other crops. So, futures prices went really high because, it was a smaller crop and obviously most of it's growing up in that region. Local basis collapsed and futures prices went higher. Now that was on the oats market, and I think similar things happened with corn, soybeans, areas where, they relied heavily on rail movement, to empty the bins in the area for the farmers. And I think bids went to almost where you couldn't even sell your product for a period of time while that was going on. So it can have really big effects on a domestic market. But to Dustin's point, to be a big effect on, the nation supply and demand, if it's just that one instance, probably not a big deal. But it can be a big deal for, several areas that are, heavily reliant on that rail.
Very good. No, this is good, and we appreciate everybody's feedback. Anytime you've got questions, comments on the show, we like to keep it open and do our best to look up the answers if we don't know them and come up with a solution there, or at least a response. So thanks for everybody that
one comment I will make on the first question of old crop. Is it going to be carried over? I think you keep an eye on that Dec-March spread, right? We saw that going into first notice day from a lot of that old crop bushels being put on DP contract and getting rolled right at the end. And we saw Dec-March last year got to the widest it's ever been. And we're already starting to price in Dec-March this year, a lot wider than we traditionally would have or historically. So it got out to 19.5 cents last night. So the market, remembered last year, right, and is already starting to price in some of that. So it'd be interesting to see how that spread. So that's what I would say. Keep an eye on that Dec-March spread, especially going into the end of the December contract, to get an idea of, are a lot of farmers going to be using these contracts again this year?
Yeah, I'd add one more to that. Last year we also saw flat price beans were $13 off the combine. So we saw a lot of farmers sell a lot of beans off the combine and store corn. So flat prices were much higher. So you could generate a lot more cash by selling your beans. You had big yields and high prices, $13 beans versus call it $9.50 right now. That's a big difference, and then if you go put, corn on DP, they're getting 60%, maybe some cases 70% of that money. Right. So to Dustin's point and Jason's, you can free up a lot more cash doing that last year than you can this year. And also it didn't work. The DP roll was very expensive for everybody. So I think remembering that it didn't work and you don't have the same tools that you do to just sell X amount of flat price at a much higher level, the cash needs could be a lot higher. So you might just naturally have to sell more bushels to service your debt, do all those kinds of things. And another part, interest rates were lower coming into that period from the previous operating line than they are now. So I think several factors would stack the odds against seeing a similar repeat this year.
Yeah, agreed.
What's our impression so far of the tour, guys? Looking at Indiana numbers, Nebraska numbers, I thought it was interesting. I kind of peeled back the onion a little bit this morning on the Indiana stuff, and Ben, you may be able to allude a little to this, but they said that sampling through the central part of the state was considerably better than as you got kind of north, is what I took from it. But outside of that, I guess just some comments, guys, from so far what we've seen.
I'm going to go off of what I speak to my customers about. The general notion that I get is that the corn crop is pretty good. It's not as good as last year, right? That's for Indiana. Ohio, I think, will disappoint people if they're looking for a crop like last year. A lot of variability in Ohio on the amount that people produce. And last year, every area had near optimal conditions. The tour doesn't really go heavily into Southwest Ohio. That's some of the best producing areas in the state, and they are struggling. They've missed a lot of rains. You can look at the preset maps and see how that's manifested itself. Not uncommon for guys to be 10% below last year's levels. And in the Northwest Ohio, not the same sort of moisture that they had last year. I would expect them to be down 5%, center part of the state. And then the area east of Columbus has been very good. But I would say that I think Indiana's good, not going to be as good as last year. And I think that Ohio is going to be noticeably worse than last year, which was a record. And I don't expect a year like that for Ohio again in the near future. It was nearly perfect everywhere. So, they're trying to cover a lot of area that, credit to them for doing what they do, taking their time. That would be my perception. I think Michigan's exceptional by and large. So I don't expect huge surprises from the Eastern Corn Belt.
Yeah. Justin, what are your impressions? I mean, bean pod counts are up relative to what they were last year, but corn, I mean, so far they've been less than the USDA. Now I know that this is a small sampling, but I guess what are your thoughts?
Yeah, again, it's they try to do a good job. It's still such a small sample size. It's so hard. We talked an old friend that worked for a major commercial. They tried doing this, with all the thousands of locations that they had, and they abandoned it years ago because it's still so hard compared to how many samples the USDA does. So I think you'll pick up on some trends, but having 8 stops here and 8 stops there, not knowing that field, it's just really, really hard. I think I haven't been surprised by any of the numbers so far. I think the big one that obviously is going to be Minnesota, Iowa, Illinois. That's, Illinois, what we're hearing from clients, huge expectations. That's always tough too. There's going to be 300 bushel yield checks. There's going to be all those kinds of things, but what do those averages actually come into? Government's got 225, I think, for Illinois. Previous record was 214. I think that's obtainable. But that's one state. I think we have to see what we talked about yesterday, is that northern Iowa, southern Minnesota. If that can hold up pretty well, I think I think we'll be kind of in the zone on corn yields personally. Now the zone might be 180 to 184. But I haven't seen anything, I guess, that I've seen that's a shocker either way. Put it that way.
So with next 2 days they'll wrap. So I think Thursday night we'll get the final number. Is it Thursday night? I think we get the final number. Friday night. It's usually going into the weekend. Yeah. So Friday night we'll get the total national number as they have their final meeting. So next 2 days will be interesting. We'll follow that stuff. I guess any other thoughts here, guys? One thing, Dustin, I think we were going to talk about just briefly is this jobs report revision. Might want to watch the outside markets. They're looking for potentially 1 million revision on the jobs data out of Jackson Hole, which would be a record and would kind of lend itself to some poor data if as you break it down.
Yeah. I think definitely the impact the currencies have, I think are a big one, especially right now. The more the dollar can gain against the real, the worse we're at. The more the real can gain against the dollar, the better we have for potential rebound. We are competitive again, as we're seeing with all these daily sales. One thing on the spreads I wanted to know, I mean, like, just because I know we're coming to a very critical time, which is the September 1st notice day is a week from Friday. So a week from Thursday is the last roll day. We've already got SEP down to 23 under here yesterday. 24 cents is the cost of the receipts. 31 cents is about a full carry rate at 7.5%. So it's going to be something that I think comes to a head still. If we are seeing kind of a dump of old crop bushels, we saw in that June stocks report how much more growers were holding on to, corn in the bin from a year prior. So this is kind of that time frame of the year where spreads are kind of showing the hands of where everybody's at, and we're already seeing convergence of new crop basis with the old crop basis right now. There's really no September premium bids in the East. So when we get to harvest, if a lot of these elevators are full, that's just, to Jason's point about that Dec-March spread is already quite wide. It took all the way till the end of November for us to go post those record spread levels. And, Dec July went to 48.5 under. We have to still keep in mind this 8 cents a month charge is something that still a lot of people don't really factor for. When we see, Dec July in the mid high 30s, a lot of people will look back at a 10 or 20 year chart, like that's really wide. Well, they're not really taking into account that carry rates have changed since 2019. Right? That was the first year we started implementing this 8 cents a month. So we can go much wider than we expect. And that will be another disincentive for carry. So the wider we get, the more likely people will end up, I think, puking and selling corn, at the end of the season, and that you're more likely to get a harvest low in a wide carry spread like this. So just some food for thought to watch as we go into next Friday is that's kind of a tell for what's going to happen potentially going into harvest. How overloaded are we with old crop supply coming into this?
Yeah, that's the job of the market, is to incentivize enough people to carry that inventory, right? So anyone that has storage is going to do the opposite, right? If you have to pay for storage and pay big fees, then you'll probably not do it. So it's, again, the big benefit of owning your own storage, right? So that's what the market's really incentivizing here. Someone's got to carry this big crop and old crop bushels into, until somebody else can, obviously store it and use it. So,
yeah, we have two incentives for that. You have high interest rates, so you need to cover the cost of interest. And if you are, if we're talking about a big logistical problem, especially near the river, Iowa and Illinois are both expected to be blowing out previous all-time records for yield right now. I think that there's a good chance that spreads need to be this wide and maybe even wider. If they just get overloaded on harvest logistics. That said, a lot of people would have said the same thing in 2020, and then the market changed. China started buying. We had the Duratio event, and spreads completely flipped and almost went inverted. Dec to July went to 1 under. So I don't want to be overly opinionated about what can happen. The narrative can still change as we get to the end, especially if yields don't come in where we expect them to. But that I think spreads are almost a more important indicator than flat price at this point.
Well, very good, guys. Appreciate all the thoughts and comments. We just came into the open here. We got December corn up 2 at $4 even. November soybeans are up 7 1/4 at $9.83 1/4. And December Chicago wheat is down 3 at $5.53 1/2. Tomorrow morning, 7:30 Central, we'll have export sales, so we'll take a look at that. We'll also have results from Pro Farmer Crop Tour. We appreciate everybody's thoughts and comments and tuning in on a daily basis. Go ahead if you don't mind and throw us a like or subscribe. It certainly helps us. It doesn't cost you anything to do so. Keeps you up to speed on all things AgYield and lets you know when we're putting out premium content there. So thanks again to everybody that tunes in on a daily basis. We are doing this every day that the markets are open at 8:15 Central Time, streaming live on X, Facebook Live, and YouTube Live. Appreciate the thoughts and comments, guys. It was a good conversation this morning. I hope everybody has a great day, and we look forward to talking to you again tomorrow.
Thanks, sir.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.